I think Bitcoin, whether it's because of liquidity or not, everyone's expecting a big year for Bitcoin. What do you think will happen this year? Do you think we'll see 200K plus Bitcoin?
Well, I've been saying for a long time that my vision was, I was thinking there would be about $180,000 this fall.
Mm-hmm.
Now a lot of things have happened since then. Yeah. See, here's the global liquidity. This is again, Michael's chart and this is staggered. So Bitcoin is actually, I think 6 to 8 weeks, backwards here. So, it has to catch up. But, I think that what happens here, Danny, is that we have a lot of tailwinds that may push that forward.
Mm-hmm.
The 180,000. I still think that we can see it this year. We could easily double, especially with all the tailwinds. Well, what are the tailwinds? The tailwinds are, there's a whole host of things that have been happening. You've got the gap accounting change where Bitcoin doesn't have to be held as an impaired asset on companies' books anymore. They can hold it at mark to market, which prevented a lot of companies from buying it. They just didn't want it on their books. The ETFs came out, the strongest launch of ETFs in the history. IBIT, BlackRock's ETF, gathered $50 billion of assets in less than a year.
Insane.
Blows everything away. Make it very simple now for anybody, both any institution and meaning endowments, pension funds, even hedge funds who didn't want to deal with having their keys. It was easy for them to just step out there and buy them. And people who have their IRAs and individuals who want to own Bitcoin but have no idea what to do with the keys and all that. Super simple. It's been a huge boon for Bitcoin.
Mm-hmm.
Then you had options on top of that, which helps drive even more liquidity in there because then you've got sophisticated investors who are using options to hedge their strategy so they can even own more Bitcoin. That's another one. Then you've got, SAB 121 was just finally fully repealed. That bulletin from the SEC that was onerous for banks to own Bitcoin and to deal in Bitcoin. It made it very difficult for them. And it basically threatened them that if they held Bitcoin on their balance sheet, that the SEC would audit them or come down with them because they weren't abiding by these really tight, recommendation. And so, but it was finally repealed fully. That's off so that I think allows companies to start moving into this space. Meaning they're going to make it easy for you to buy Bitcoin right through your Chase or Wells Fargo or Citibank account, and then they're going to offer products around it. They're going to lend around it. They're going to, their collateral products. They're going to be all kinds of stuff.
In an era where the stock market landscape shifts rapidly, a tremor has recently rippled through the cryptosphere. Bitcoin witnessed another noticeable dip, falling 1.6%. This move captured the attention of traders and investors alike, setting the stage for heightened anticipation ahead of the U.S. Federal Reserve's pivotal meeting. Add to this the unexpected liquidation of 2 major crypto ETFs by 21 shares. The pulse of the market seems poised for a dramatic change. But what lies beneath these headlines? Welcome back to Investocracy Crypto.
And then of course we've got this new administration who's clearly crypto friendly. I mean, the guy launched his own Trump coin and Melania coin. He's talked about Bitcoin a lot, as has his family and his cabinet. You've got people around him who, like David Sachs and Bissett, these guys own Bitcoin. Lutnick. So that's all a big deal. And you've got Senator Lummis, who's been driving this bill, the Bitcoin Act. And
Hester Peirce in the SEC.
Reserve. What's that?
And Hester Peirce in the SEC.
And oh yeah, that's right. Peirce at the SEC, exactly. But another tailwind is the Bitcoin Act possibility. I don't think it's probability in the next few months. It's got a long way to go. I mean, Senator Lummis from Wyoming she authored the bill. She needs a co-sponsor. She needs to get it through committees and comments and then revisions and negotiations. And it's a gauntlet that they've got to run with that thing. It's going to take a long time. Nothing happens quickly in Congress. Nothing. It's got to get through both branches of Congress and then to the president's desk on something that he's willing to sign. He's likely willing to sign anything they get to him, but we'll see. And I don't see an executive order coming, because if you think about him signing an executive order that that would make the U.S. government buy Bitcoin through the Exchange Stabilization Fund,
Yeah.
like through the Gold Reserve Act, then he could buy probably $50 billion, maybe even as much as $100 billion out of that $200 billion fund of it. But it's a bad signal to the world that we're needing to stabilize our currency. That's just not, I just don't think they're going to want to do that.
Yeah.
As much as a lot of Bitcoiners are hoping that will happen, I don't see them acting that way. Remember, again, Trump he's got a huge ego. He wants the stock market up at all-time highs. He wants financial stability, wants the economy roaring. And the way to do that is to keep kicking this can down the road, creating liquidity, making money easy, and keep going. And so, so those are all kind of tailwinds for Bitcoin on top of this expansion of liquidity and liquidity getting easy. So, or continuing. It's already been ticking back up. It's just going to continue. Probably into the end of this year, into next year.
The heart of the storm reveals Bitcoin's recent slip is not just a singular occurrence, but part of a larger narrative. The currency had skyrocketed beyond $108,000 in December 2024, riding on the euphoria of President Donald Trump's election victory. Hopeful whispers of crypto-friendly regulations and even a national Bitcoin reserve stoked the fire. However, as the Fed maintained a hawkish eye on inflation, skeptical glances fell upon the horizon. Investors found themselves in a tango with uncertainty, wondering how recent tariff policies might alter economic tunes.
Yeah, so this is the black line is that's the global liquidity measure according to Michael, and that 65-month wave is just that. It's that wave line that is it's a derivative of that time period, and it goes in that it's like a sine wave. Mm-hmm. And you can see that the global liquidity cycle just follows it, not to a T, but you can see that
close.
The peaks and valleys kind of hit in those same periods.
Yeah.
Right. So when you go back to like 2000, you can see that global liquidity was coming out in 2000, 2001. There was a rising after that.
Uh-huh.
And go to 2008, you can see how global liquidity, it peaked right at that global financial, the great financial crisis. And then, it just collapsed. But you see how it stops there in 2010, 2011, 2012, that black line kind of stops. Well, that's central bank manipulation. Right. So they kept it from contracting too much, too rapidly. And then the upside, they, in 2014 to 2018, they were keeping it from expanding too much. But then you get back into 2019, you see how all the capital's coming out. Well, that's where we had, right in 2019, we had a crisis here in the United States. I've talked about this a few times before, but there was a repo spike. What is that? Well, this is a great chart to see what happened here. You can see right there, 2019, you've got the liquidity kind of bottoms out. Well, what happened was the Treasury in September to October of 2019, the Treasury was, they issued their QRA, their quarterly funding announcement, talking about how many bonds they're going to issue, how much money they're going to borrow. And it surprised people. At the same time that you had companies making their tax payments for the fall, at the same time the dollar was strong, and it was difficult for foreign corporations to buy treasuries and foreign entities to buy treasuries.
Adding fuel to the fire, 21 shares declared the liquidation of their flagship ETFs, creating a flurry of market activity. The ARK 21 shares, active Bitcoin Ethereum strategy ETF, and its on-chain counterpart are set to cease their dance by March 27th. While some might see this as a candle extinguished, 21 shares and ARK Investment Management insist their dedication to regulated crypto investment remains unwavering. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
How do you beat the Bitcoin hurdle rate? How do you think about that?
Yeah. Well, I don't say we're going to beat the Bitcoin hurdle rate. Depends on what you think the hurdle rate is going to be, first of all.
Yeah.
So our aim is to beat Bitcoin on a risk-adjusted basis for investors. So, tamp down volatility, still get exposure to the space and get exposure to things in the space. It's hard to tell exactly where we're at because we mark our privates at cost. So unless there is an absolutely compelling reason for us to mark it up, like we're not doing a Series A, Series B, Series C, and then marking it up each way, that's what VCs do. We're not doing that. We're mark to market on our public investments. Liquidate the portfolio, you get exactly what you see back on your investment statement. The privates are just marked at cost right now. There's been nothing compelling to mark any of them up.
So, where does this leave the ambitious investor? There's palpable tension in the air as the Federal Reserve's meeting approaches, yet with it comes the chance for insight and opportunity for Bitcoin. But what do you think? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.